Do you know how to size your positions? How big are your trades? Well, today I'm going to show you a system that I've been using for over 30 years. I've been doing this for a long time. Firstly, we're going to talk about how you should determine your best position size. And we're going to have a little chat about how much money you should be trading in the market, in Forex, in indexes, in commodities, or whatever else it is that you prefer to trade. On top of which, later, I'm going to take you to the charts, and then I'm going to show you the system that I use, that I trade on a daily basis. And we do invest in equities as well. And then once a week, I'll bring you a little video about investing, and that can be important as well. Investing is important to your portfolio because if you invest and you forget about those stocks for the next 10 years, you'll be so happy when you come back to those stocks in 10 years' time. In fact, if you could get hold of me, you'll probably get hold of me and say, geez, old man, you did me such a good favor. But after doing this for a long time, it's easy to speak in hindsight. Done it all before and I've seen it all before. Now, just to clear a couple of things up before we get to talking about what trade sizes you should be using, there's been a couple of people out there that have mentioned that these are not live charts and this, that, and the other, and you should be trading live and all that sort of thing. And yeah, we'll get to it when the channel's huge. We'll definitely get to maybe a few live trading sessions. But I don't see the importance behind that because what I'm trying to get over to you guys is the psychology of trading. Trading is a 50-50 game. I'm trying to get over to you that you need to make more on your wins and lose less on your losses. I'm trying to show you a strategy that can work for you, a support and resistance strategy where you can manage your risk. For that, we don't need live trading. Now, my concern is with live trading. My concern is, look, firstly, I'm not one of those guys that wants to show you all my Lambos and show you my fancy house and show you my big fancy 4x4s and all the fancy stuff and BS and show you portfolios that are faked and all this rubbish. I'm out there to show you a trading system. Now, if you go and watch any trading guy on the internet, whether he's talking BS, whether he's trading live, whether he's not trading live or she, it doesn't matter. If they're not trying to sell you anything, if they're actually going to show you something on how to trade, 9 times out of 10, they know how to trade and they're showing you something important. Don't discard it. These systems are important to understand. If you understand the systems in the market, then you'll know what you're dealing with. I myself, I don't trade with all the indicators, but over the years, I've learned how to use them. I know how to use them. Even the Ichimoku, whatever fancy system, I know how to use it. I don't know how to pronounce it, but I know how to use it. So, get to know your environment. Get to know the environment that you're working in and understand trading. Understand what trading is all about. You will have noticed that I don't just trade Forex, that I don't just trade indexes, that I don't just invest in equities. I do them all. I'm trading them all because over the years I've learned how to trade each separate different thing. And there's no difference between them. Everybody thinks that Forex is now something completely different to indexes. And it's not, guys. It's the same thing at the end of the day. So all I wanted to get over to you guys is I'm not trying to show you live trading. I'm not trying to show off, and this is not about me. This is about you. This is about you learning a system and learning how to trade on the stock market. It's not about me showing off what I've got, what I can make and what I can do. It's about you learning how to trade and how to trade for yourself without having to copy me or follow my trades or anything to that effect. I do put a trade of the day out every day on the secret blog, and I've also got the members video that goes out every day on trades. That's great. And you can follow those ideas because it's not trading advice. It's just an idea from my side and what I'm trading. Don't think I get it right every time. I'm a 50-50 trader just like everyone else. And to become a 50-50 trader, guys, you've got to be pretty good. And you've really got to learn how to trade in the stock market. It's not as simple as you think a 50-50 trader is not that good. Wait until you've traded in the market for a while and look at your own statistics. If you're not a profitable trader, you're not a 50-50 trader, not in the least. I got friends that have got 20%, 30% success rates. I know companies that have got that kind of success rate, pro traders, and they're making a profit. And do you know how they're making a profit? They're making more on their wins and losing less on their losses. Which brings me to the topic that we were going to talk about today in the first place, and that is, how much should I trade? What size should I trade on my portfolio? And the answer to this question is one of the most simple answers that you'll probably ever get from me. And you'll say, how's that? Well, it's terribly simple, and it is trade within your means. That's how you trade size. You'll say, but I want to know exactly how much I should trade on every product and how many contracts I should trade, etc., and what have you. Now, every instrument has got a different size. Every broker might have a different gearing available to every different trader. And if you're trading indexes, and if you're trading Forex, and if you're trading commodities, and if you're trading equities, you're going to get different gearing sizes. You're going to get different percentages against you. For example, if you're trading an equity on geared trading, they're probably going to give you a percentage gearing. If you're trading Forex, they're gonna give you a 10-to-1. If you're trading indexes, they might give you a 8-to-1 or 7-to-1 on different products. For example, the DAX might be different to the US 500, depending on what contracts are offered from the main systems. So before I tell you how much of a contract to trade on any particular instrument, understand this. You just need to look at your system, look at what you got, and see how much a point costs you, all right, on whatever you're trading, whether it be an index, whether it be Forex, whether it be a share, it doesn't matter. Just work out how much it's costing you. If you're trading $200 a point on Forex, that means for every point that it moves, it's costing you $200. It goes down, and it's making you $200 if it goes up. That means if you make 5 points, you make $1,000, but you've got to have the money to cover that. So if you've got, say, $100,000 in your account, you could probably trade with those kinds of points. But are you comfortable trading with $200 a point? If you were to lose $5,000 in a matter of 30 seconds, would you be comfortable with that? Because if not, then you've got to change that amount. Maybe you're only comfortable with $2 a point. Then you might only lose $20 or $10 or $5 or whatever the case. So all I'm saying to you guys is work out how much it's going to cost you on the move per point. Now, what I normally do is I'll take where my stop loss is going to be. Where's my stop loss going to be? And then I'll work out how much the trade is going to cost me if it reaches the stop loss. That's the size of the trade that I'm going to take. So if I'm only prepared to lose $100, let's say that's my limit, $100. I'm not prepared to lose a cent more than $100. Then what I'm going to do, I'm going to look at my trade and say, well, if I take this trade, my stop loss needs to be here. So I got to work out from cost to that stop loss, how much is $100? At what point do I need to put my stop loss so that I only lose $100, that I don't lose more than $100? And that is seriously not easy, okay? So just take it from the cost. And if you're trading on a 5-minute chart, you're going to have to think quick. That's why I always recommend starting on the lower time frames and working your way up so that you've got some time to work out how much it's going to cost you per trade. And then don't pay more for the trade. If it hits your stop loss, lose the $100 and move on to the next trade. Now, if you're prepared to lose $100, try to make sure that the trade's going to make you at least $200 or maybe $300. I don't mind if you go 50-50 on a trade with the view to, well, if I lose $50, I'll make $50. But if I'm making $50, there might be an opportunity for me to add to the trade and I can make $100. That sort of scenario. So you can look at that as well. So that's not a dead loss. There is that scenario on a 50-50 trade, but I prefer a trade where I can see a lot of green and a little bit of red. So how you work out the size of your trade is, and also be careful, you get mini contracts and you get major contracts. So those are different sizes as well. So, you know, if you change broker and it's one's got major contracts and one's selling you mini contracts, where a mini contract costs you $10 there, and you suddenly got another broker and you play here and suddenly that contract costs you $1,000. Watch out. Make sure you know what size your contracts are before you trade. So it's as simple as work out how much a point's going to cost you and then work out what your stop loss is going to be. If you go onto the internet, there are a few places where you can get little calculators like this, FX calculators and what have you, and you can just put the amount in and it'll calculate how many contracts you need to trade for that amount of money. There's fancy little free things out there that are available just about everywhere. But okay, so guys, just remember, trading is risky. 80% of traders do lose money. I don't know if I told you that already. And also pop down to the description, get your free Forex book. It's there. I'm not charging you for it. It's a PDF. just download it for yourself and give it a read. It's all about trends and that sort of thing. And like I said, pop down to the secret blog, because the secret blog is going to give you a trade of the day every single day. Now, let's get to the charts and let's go and have a look at a system that I use every single day. And it's called a simple price action and support and resistance. Let's have a look quickly, guys. So here we are. We're on a Forex trade. This is a Euro GBP. And this is the day chart for the Euro Great British Pound. And how are we going to look at support and resistance? Now, you always go top down, as I told you in the last video. And on this particular product, we are now on the day chart. And on the day chart, you can clearly see that we've got a bearish pattern that's developed here. So this bearish pattern is telling you, you know what, try and keep it short. Now, you could have the supermarket mentality and think, but, you know, this is cheap, man. This is right at the bottom. Why aren't I buying this? Well, it doesn't work like that in Forex, and it doesn't work like that in indexes, and it just doesn't work like that in the stock market. Normally, when something's cheap, it's because something's wrong, and if something's expensive, it's because something is right. It's not like the supermarket where it's on discount. It's completely different. Now, how do we look at support and resistance levels? We're on the day chart, we take it, and we draw our support in, and let's just see, we'll take a block. And why do we use blocks? It's because nothing is spot on. An algorithm can't tell exactly where a price is. So it's kind of in that area. That's what you're looking for. That's your support area. It's an area. It's not an exact spot. And if it's a stop, it's an invalidation. It's not a stop loss. It means your trade is no longer valid. It's invalid. You wouldn't take that trade again. Let's look at where we might have some resistance on this product. And if we go here, there's some resistance over there. Now, because this is on a higher time frame, you now have an idea of it's in a bearish mode. You have an idea of where your main resistance is, and you have an idea of where your main support is. Now you can take it down to a lower time frame, either the 4 hours, which will tell you it's there, or maybe you want to trade on the 1 hour. The 1 hour is great. Let's have a look at the 1 hour chart, just out of pure interest. Now, on a 1 hour chart, I would go long on this trade, but we know that this is a bearish product. We know that it's running in a bear mode. So it might be better, if you want to stay safe, to wait for the bear trade to play out for you. If you take a long trade, you'll probably be successful, but if it breaks through the support, then it'll prove that the bearish overall picture was correct. So there is a good chance that this trade is going to go against you if you go long. There's two reasons for that. Number one, on the higher time frame, on the day chart, on the main time frame, this product is bearish. Number two, look at the huge red candles coming down to this support level. It was flying down. But on the positive side, you've got some money lying in this general area up here, and that money might be of some value to you. Okay, so you might actually get a short trade out of this particular spot right here. So yeah, there is some supply here of money. So it might go long and it might go into here. But after looking at the day, your best bet is to actually wait for the trade to get into this area and then take a short, because it's probably going short. And this being on the hour, it might not take that long to get up here. But if it is going up here, go against the trend. But remember, you're going against a trend. This is short. This in itself is a bearish trend, which you would be going against. And in all likelihood, it hasn't broken the trend. It hasn't broken this trend. It's only actually broken this trend if it gets about halfway above this candle. On the hourly chart, it's broken the trend. But on the day, it wouldn't have broken this trend. So yes, while you can trade out of the support, try and stay with the trend. The trend is your friend. That's a saying we got in the market. The trend is your friend. Try and follow the trends where you can. So yeah, you can trade this both ways. So your long trade on this particular product would be high risk. Your short trade on this particular product would be lower risk. But you don't want to take a short trade from this point because it is like at the bottom. You want to wait for it to come back a bit and then give you some indication that it's going to come down. Yeah, so that's your charts for today. So that's the trading system that I use on a daily basis, support and resistance. We all know that I like to trade with support and resistance, and it's a price action thing. It makes trading so much easier and so much simpler. So now it's Wednesday today, so on Friday I'm going to bring you a video which basically talks about risk management. We're going to talk about the risk management in the market and how best to manage your risk by trading these systems, and how you can protect yourself from making a loss, and how you can become, if not a break-even trader, at least a profitable trader. Because so many traders out there, like I said, 80% of traders lose money. So many traders have not become profitable. And it's really important for you to become a profitable trader. So the best way to become profitable and how to manage your risk is going to be in the next video. I want to thank you guys for watching this one. Don't forget to watch the other videos. That'll show you how to get through with the trading systems. Thanks for watching. Till next time, guys. Thanks a lot. Cheers and bye.